All right, the 7/6 arm. What is it? It's a very popular option in mortgages. I'd say typically anyway, but since we've seen rates go up, there are a lot of inquiries about this, a lot of advantages and disadvantages. But let's explain all the details. I'll go over this as quickly as possible. Remember, you can comment, you can call me, leave questions, etc. We are here to help you. So let's dive into the 7/6 arm. Okay, so the 7/6 arm. First of all, let's talk about the 7 and the 6. What does that mean? And ARM. So ARM stands for adjustable rate mortgage. So this means that your mortgage is not fixed for the entire term. It means the rate will change up and down invariably. So then the 7 means that this loan is initially fixed for 7 years. So there are 10/6 arms that are fixed for 10 years. There's 5. 1 arms are very popular. Different adjustment period there we could talk about later. But basically, the first number of an arm is the fixed term, like how many years the loan would be fixed for. And then the 6, what this means is this is the adjustment period for the loan. So in this case, it's every 6 months the loan adjusts after the 8th year. I'm sorry, the 7th year. So after the 7th year, in the 8th year, the loan will adjust every 6 months, twice a year, up or down, depending on where the market goes, etc. Now, another important thing to know about an ARM, especially the one you're going to get, is the caps. So caps, typically there's 3 numbers, right, with a slash in between them, like a 515 is very common for this loan. So let's talk about what that means. It means that your loan is can adjust the first adjustment period as much as 5%. So that's what the first 5 means. It means you can adjust as much as 5% the first time. And then the 1 is 1%, the maximum adjustment after the first adjustment period. So then every 6 months, if we discussed, right, the loan can adjust, or can and will. And so it can and will adjust a maximum of 1% or less. It can't go more than that. And then the third 5 is a 5% maximum up and down over the life of the loan. That's the most it can go up, and the most it can go down is that 5%. So that's what that 515 means. Another important thing to understand about an ARM is the way an ARM works. So an ARM is an adjustable rate mortgage, as we've already discussed, and it's tied to financial market indexes. Very popular ones are the CMT Treasury, COFI, Cost of Funds Index, or the Secured Overnight Financing Rate. So those are tied to the index, and that's how we calculate what your mortgage rate is in the adjustment period. Is we take whatever that index is currently, and then we add a margin to it. And so what is a margin? Now, a margin is how essentially, like, the investors, the banks, the servicers make their money, right? So whatever your index is, let's just say you have a 2.5% margin above that, just as a number. So if the rates, when your adjustment goes adjustable, right, when you have that 8th year in your first adjustment, let's just say, you know, if the rate was 5% and you had a 2.25 margin, then your rate on your loan would be 7.25. And so that's how that works. Now, hopefully it's not that high, of course, but that is just an example of how the rate plus the margin, the index plus the margin will give you your rate. The index plus the margin will give you your rate. Now let's talk about the advantages and disadvantages. As far as advantages go, these do price out pretty well most of the time, and lower than 30-year fixed, and so that's why a lot of people are attracted to them. You know, if you think rates may go down again in the future, then there's an option to refinance. Also, if your plan is to move in the next 7 years, these are some of the advantages of this loan. I'd say the disadvantage, of course, is uncertainty, and you never know where you might be in the next 7 years or 8 years. And if the market's a lot higher than it was when you secured the loan, then you could be in a little bit of trouble as far as your payment escalating really high, right? So that is something that you should be concerned about if you're in a 7-year ARM. So I'd say those are the major advantages, disadvantages, kind of the nuts and bolts of how this thing works. I'm Garrick Wordmuller, independent mortgage broker that works for the people, president and CEO of Fresh Home Loan, and we are here to help you. Thank you and have a great day. Oh, and don't forget to like, subscribe, and all those great things.
Yeah, Fresh Home Loan Inc. You want mortgage rates without breaking your bank? Well, I got what you need. I'll keep it 100. The very best lender. We sell money, yeah. There's really no equal. Independent mortgage brokers that work for the people. I know that the pandemic's brought many problems. What we offer is better.